welcome to the closing beat, everybody. Happy Wednesday. How you doing out there? Hope you're having a good day. Everything is good. This is our quick stock market update show that we do to cover the stock market. So we'll go through all the good, the bad, and the ugly on the day as we do. And then I'll stick around, see if I can answer any questions for you, which we usually... we're also playing a game called Guess the Dow. If you feel like taking... is Miles Davis. We're going to do a song today called Two Base Hit. Well, I'm not going to play it for you, but if you want to look it up tonight, a little more of an upbeat song if you want to play around there with some jazz music tonight. All right, let's go over to the charts and everything, or not the charts, let's go over to the market, see what we got going on today. This is 7 of 8 days that we've got a stock market rally going on. 7 of 8 days. This thing is pretty slick in terms of just moving higher. Every day is green, right? The lights back there, they stay green. There's not really much else I can do. You see the performance on your screen there, but I'll point out that the Russell 2000 was the strongest of the major indices today. Uncle Russ, we call him. And that was because of financials and industrials inside the small cap stocks there. Biggest factor there. We'll talk about that a little bit later there. But the Russell 2000 is up 50% off of its lows. The NASDAQ was the laggard again today. Yesterday was the net laggard as well, but still a decent gain. I mean, obviously you can't complain about a NASDAQ gaining about 1% overall. And if you look, let's go over to the Qs real quick. So we'll take a look at the NASDAQ 100. This is the NASDAQ 100 ETF. If you want to follow along there, take a look at it. It's basically at new highs, almost new highs there, new all-time highs, by the way. So that means it's recovered 100% of what it had lost and is sitting at new highs there. Some of the things that held it back a little bit today would have been Facebook. A little bit of an off day again for Facebook. Yesterday in the last 10 minutes, Facebook recovered, but today Facebook just stayed weak. They're dealing with some things there, right? Also some Snapchat news came out. What?
Charts aren't updated.
Oh, okay. Well, we'll go back to it. Go back to the main thing then. We'll see what happens. But yeah, also you had ATVI, a little bit weak on the day, so that's all it was. I mean, just off day for that one there. And I'll see if by chance I could just come over here real quick and go with that. Maybe that helps. I don't know. We'll give it a shot. So that's that. Anyways, for the S&P 500, you got 7 of the last 8 days higher. You know, only 15%. Well, as you look through it, only 15% of the S&P 500 was in the red today. That's it. Everything else was positive on the day. 22% of the S&P 500 gained 5% or more on the day, and almost 60% of the S&P 500 was higher by at least 2% or more. So that's pretty cool. Economic data came out, wasn't as bad as expected overall. So, hey, it did come up, didn't it? Okay, we'll go with that next time. So economic data not as bad as expected. Preliminary payrolls came out, and although they were nasty, right? We were expecting 9 million. We got 2.67 somewhere in there. Basically, that started off our rally overall. I'm going to go back to the charts real quick because it seems like they're working here, and if I can, just for fun, let me just see if I can show you. I'm going to look at the futures market here. Overnight, obviously, we were positive on the day. Give it a second. Futures market was positive, and at 8:30, well, 8:15, that's where the ADP numbers came out. That's what kicked off our rally for the day. So if you want to know what caused the rally on the day, it was those employment numbers coming out not as bad as expected, and that would be right about here where the cursor is. You can see the initial pop on that news, and then throughout the day we continued with that rally. So that basically got us started. That's all I wanted to show you there in those terms there. We do have some underlying issues still in the stock market. You got China canceling U.S. farm shipments, and then today the U.S. says, well, we're going to find a way to ban Chinese flights from coming into the U.S. That actually starts next week, I believe. So, yeah, that's kind of unfortunate, but that's underlying news there. Normally that'd be really bad news, but Honey Badger don't care, man. I mean, the stock market doesn't care. It just keeps moving higher as if there's nothing going on there. So the question is, not so much when will the markets pull back now. The question is, what's going to stop the markets from going higher? What kind of news is it going to take? What kind of event? What kind of issue is it going to take to get the stock market to go higher? And I think the answer is pretty much just going to be if we all get a little too excited to the upside. Other than that, there's been plenty of bad news, but it doesn't seem to affect the market. One of the studies I want to share with you here today, which should pop up, a little slide we got prepared for you, Interesting study that we've done. We're going to be doing a membership site soon for those of you that can't join us as customers here at Jazz Wealth. And I'm sort of, over the last couple weeks, I've been showing you some of the research and stuff that we plan on offering in that service, and I'll let you know when it's live. But one of the things that we noticed is volatility versus the market. So realized volatility, I'm not talking about implied volatility, realized volatility has fallen over 20% just in the last month, which means the level of fear has fallen over 20% in the last month. The stock market is up, we're almost up to a 10% gain over the last month. What that tells you, first of all, is obviously people are not fearful of this market. The market's moving higher, fear is moving lower. The problem is that spread. When we've had at least, in fact, if you look on the screen there, last time that happened was 2009. There was a legitimate financial crisis going on. And then there's only two other times that it's happened in life of the market. The Great Depression and 1987, the catastrophe there. So anyways, this is only the fourth time in history that this has happened, which tells you the markets are moving higher on some of the lowest fear of a drop in the market ever in history. So not only is the markets moving higher, and yeah, the volatility is lower, but volatility is moving lower at a rate as if nobody at all cares about anything. Think of all the wars, all the things we've been through. There is yet to be a move like this, only 4 other times in history. So that gives you an idea of how little fear there is in the market. In other words, it's a lot of people out there chasing. Now you can't blame it on anything lagging behind at this point. If we take a look, here's the small cap versus the large cap. The small cap area has now actually overtaken the performance of the large cap stocks out there. So that now, granted, it's just since May 19th, right? It just started peaking up there. But you've got small cap now performing a lot better than large cap out there. So there's your argument for an economy that's recovering or almost in full recovery mode. Small caps have been lagging behind there just a little bit. So that's what you have for that. I wanted to just share that with you. I've got one more study to share with you here in just a little bit. First, our FinTips video today was on finding the right dividend stocks, and in particular looking at volatility. Are you a dividend income investor or a dividend growth investor? I think you'll really, really like that video, and I hope to expand on that one because I think you guys like that sort of geeky detail. And then Friday we're going to talk about the tax brackets. Very simple video. I get a lot of basic questions. Just want to cover the tax brackets for you there. And then our Wine and Wealth class for our customers tomorrow night. We're going to do forward-looking market research. This has been one of the fastest bull markets on record in terms of the rally there. So we're going to study all the other ones. We're going to show performance, of course, do all that great stuff, and hang out with our customers. So if you're one of us here at Jazz Wealth, hope you'll join us for that. Okay, let's go to the sector breakdown. If you look at the sectors today, 10 of 11 sectors were higher on the day. There was only one that was laggard there. It's going to be healthcare. 7 sectors were higher by 1% or more on the day. Let's take a look. You got financials. They were the leader along with industrials. Industrials technically won the race at the end of the day, but financials were the leader. Very strong rally off the lows. I know some of you guys are just so excited and been wanting financials to get going, and so you're finally getting a nice move here. JP Morgan up 5% on the day. In fact, the top 5 stocks inside of the financial sector were your leaders today. Citigroup, Wells Fargo, Berkshire Hathaway, and Bank of America, all strong names on the day. And even with this, it's still the second worst performing sector in all of the S&P 500 year to date. Energy is the worst, but financials down now 18%, 17% actually. So great to see the financials in there, and what a difference in terms of the stock market rally when you have financials in there as well. It's been tech kind of leading the way, and I've been picking on financials a little bit. Finally, they got things going. If you go over to communication services, just a slight uptick there. It kind of struggled today, and a lot of the struggle is because of Facebook. Facebook down 1% on the day. Alphabet as well. They've got an antitrust lawsuit, or not antitrust. They're working on what was it with them? Maybe a privacy lawsuit coming out there with them. So not the most exciting stock on the day. Industrials were the leader by the end of the day. They continued their rally into the close about 4%. You can see on the screen off to the right there. The hint from the other day, remember when we talked about the industrial sector waking up? That was literally the day that it woke up and started taking off. So I like to be the guy that tells you ahead of time rather than the guy that I told you so. And so hopefully you were able to keep an eye on that. Check that one out. Boeing is going to be the biggest contributor of the rally in the industrials today, up 13%. Third Point has taken a position in the company. However, it was reported that they took a position and everybody assumed it was stock. In fact, it was not stock. It's a debt position in Boeing. So I don't know if that matters to you, but it's about the details, right? The other leading areas in industrials today are going to be railroads. You got Union Pacific higher on the day, and Norfolk Southern 4.5% clearing above the 200-day moving average. Healthcare was your weak one today, down on the day, but basically down just a little bit, not too big of a deal there. It's the same culprits inside of the healthcare sector that have been holding us back. Amgen back to the 200-day moving average. I like that off that support there, and clearly other traders did as well. Abbott pulling back as well on the day. That's been one that's been pulling back. And Vertex, not as bad, but that one's been falling as well. These are some of the stocks that held back the sector today. Utilities back to the 200-day moving average and holding, right? So not able to get above the 200-day today. It was kind of middle of the road in terms of performance today with its gain of just over 1%. However, over the last 5 days, it is the leader. It's up 7.5%, over 7.5% over the last 5 days today. And every single stock was positive in this sector today. And if you look over the last month, every single stock is positive in the utilities besides Con Edison. ED is the ticker symbol there. Just thought I'd point that out. Looking at commodities, you got gold back to the low of the range. We talked about this yesterday with the sort of $16 move that it had. Yesterday, it looked like it was moving back to the low end of the range. It has officially moved back to the low end of the range there as a friendly heads up. So that's that one. And then oil, yeah, it was flat. The electronic session, or the main session, was up about 1%. It started pulling back. There's a lot of OPEC news coming out. Expect more volatility in that. Kind of hope there's more volatility there, but we'll see what happens going forward there. And that's pretty much it for the sectors there. Let's show you something here real quick on the charts. We'll go back to this screen here because we talked about gold. We talked about oil. What about copper? A lot of people look at copper and they say, okay, copper is a sort of an indicator of the stock market moving, or the economy moving higher. Strong economy can be led by copper. And this is one of the kind of studies that I'll be sharing in our membership site once it's up, just giving you a feel for it. So a lot of people look at copper, they go, copper's good, economy must be good, right? Or the economy is going to perform better. So a lot of people, when they look at copper, they go, okay, if it's doing well, that means the S&P is about to outperform. This is not my words, this is just what people look at. Well, copper is up 20% off of its lows, and actually it's its virus lows, right? The March 23rd. So up 20%, we thought, okay, that's a pretty strong move in copper. Copper can move 20% with no problem. In fact, it does it quite a bit. But we said, okay, if strong copper means a strong economy, does it mean an outperformance in the S&P? In other words, if you see copper outperforming either the other commodities or just in general have a 20% move or better, do you get better returns in the S&P? In other words, if you bought the S&P then, would you do better than any other period? Well, sometimes these studies don't lead to anything exciting, and in fact, this is one that did not. When people believe that when copper is strong, the stock market will be stronger, it's actually not true. So what we did is we looked and compared the S&P's performance with a strong price in copper, meaning 20% or greater. We compared it to just any normal period in the S&P's history. So if you look out over 1 month here, when copper is up 20% off of any recent low, the stock market performs basically the same as it always does. If you look at this over the 3-month time period, it's actually better off to just stay invested in the stock market and not try to time a copper investment. If you look at over the 6-month time period, it's basically the same thing. And only 1 year later does it slightly outperform, but not enough to get excited about and make you want to use that going forward. So whenever somebody says, oh, copper's taking off, man, the economy's going to be strong and everything, you know the performance is just going to be what it's going to be. It's not going to be anything special. And if someone tries to tell you that you should buy the market because copper's strong, you say, well, you just buy the market anyways because it doesn't beat the performance. So there you go. Just wanted to share that with you. Something different there. Plan on doing lots of different studies for you guys in our new membership site. Once it's up and running, Charlie, he's here. He's watching. Anyways, technical breakdown. Let's go over to that. You got 31 new highs on the day, and if I pull up the charts here, That's not a record, but 31 new highs is impressive over the last couple days. There's a few that stand out to me. I'm going to point out CLAC up 5%. It's a recent breakout here and a very strong one given the way that it finished today. So CLAC finished near its highs. You always want to see a breakout finish near its highs of the day to show you that you weren't the only one looking at the breakout or that there's actual momentum behind it. Think of it like this. If a stock breaks out and finishes near its highs of the day, then it means that if the stock market didn't close and we didn't have this arbitrary 4 o'clock Eastern time closing, then wouldn't it have just kept going? Wouldn't the momentum be there? So obviously a very good thing to see for CLAC. That's a semiconductor stock, did really well. We pointed out Sherwin-Williams yesterday. It's hinting at a breakout here as well. Not quite there today. I noticed no volume in this one, and when it did get to the breakout point, there wasn't a lot of excitement, a lot of volume, so that one may not be all that interesting, but I thought that should be pointed out. You've also got 7 sectors represented in the 31 highs today, and then I want to take a different look at this today. So rather than say all these hit new highs today and they look good, let's look at some that look extended. You've got Autodesk here, new 52-week highs on the day, but getting extended, very extended from historical average there, 20 period moving average or last 50-day average, just extremely overbought there. Skyworks, also getting extended, not too bad. It's starting the extended process there. Carrier, we've seen to mention this one every day. I would say that's getting a little extended in the short term. Otis Elevator, working on it as well. And Equifax, that blasted off again today. And here's a good example of what I just said. So when a stock takes off and makes new highs and closes near its high of the day, it only did that because we closed the stock market, right? It's the old argument that I use about the S&P 500, right? It only performs the way it does because someone decided that's the way it should be built, right? And that can be changed. So we closed near the highs of the day. What happened? The stock market closed. Otherwise, it would have kept going. And proof of that is today. You see the stock market opened and it just kept going. They only had to stop trading because the stock market was closed. That was basically it. So careful on your 52-week high list. Those stocks are getting a little overbought. If you start seeing more and more stocks on a 52-week high list, but they're very extended, now you start thinking, okay, that's a recipe or a signal that we could actually get the stock market to pull back. We will see what happens. There are 0 new lows on the day. New 52-week lows, going on 3 weeks now without any new 52-week lows. Domino's Pizza carrying forward with its breakout. That was a technical pattern we talked about the other day. Xilinx was the one we talked about breaking above these highs as well as the 200-day moving average. That is looking well, adding about 2.5% on the day. For a scalp, I think that's good enough. If you like an investment, that's cool too. I like this Amgen idea. I think technical traders will like this as well. Clearly they did. If you look at the volume, when Amgen hit the 200-day moving average, volume increased, meaning the number of buyers saw that and said that's a worthwhile support or a floor for me to take a shot at or for them to take a shot at. So a little bounce off the 200-day, that might be something to watch. And you're looking at Win. We mentioned the other day, Win sort of pinching in this pattern here. Any break above the highs, you would expect to see a lot of volume, a lot of excitement. Today that happened. You've got the break above the highs, little excitement. Obviously, it's continuing nicely, maybe back to the 200-day moving average. And this sort of follows up on my Monday comments of this is a watch list market. We were preparing a watch list. You wait for things to happen. You strike when things happen. So a lot of good things there. Well, 11% gain for Win today. Looking good. All right, finally, we'll wrap it up with stocks in the news. We'll see what we can do there. One of the more interesting ones that didn't get enough headlines today, Warner Music. They went public. They increased their offering from 70 million shares to 77 million shares, I believe. They priced at 25, went public at 27. Got a little bit of a gain on the day. So Warner Music, strong demand for that one there. Tesla said something about a subscription service for their software. I don't know exactly. I didn't read that one. Red Robin, the restaurant, up 11% on the day. They said 65% of their corporate-owned stores will be open by June 7th. Looking good there. Snapchat, or Snap Inc., shares were a little bit lower on the day. They're not going to promote President Trump's Snapchat. They just decided we're not going to promote it. We decided that. I think they're going to pay a price. I would imagine that's not going to go unnoticed. Campbell's Soup down 6% on the day. Sales were up 35% quarter over quarter for soup. They've been having an issue selling soup. So you go, well, if sales were up 35% and they sold a lot of soup, why wouldn't the stock be up? Because it took a global pandemic for sales of soup to go up. It's not a good sign for them. They do own other products as well. They're just, not doing as well there. So people looked at that today and said, okay, you essentially have to shut the world down in order for these guys to see a 35% bump in soup. Not very exciting. Shares were a little bit lower on the day. Very volatile lately as well. And Tyson, tell me it's not true. Tyson down 4% on the day. It's been reported that people are being indicted for price fixing of chicken. It's a report. I don't know that it's true, but I see it everywhere. Pilgrim's Pride lower. Apparently some of the executives of different chicken companies price fixing. It's a report. I didn't say it. I mean, I didn't report it. Just that's a report. Check it out. All right, earnings tomorrow. You got Smucker's, Michael's, the arts and crafts store. Broadcom coming out, and then after hours you got DocuSign, Gap, and Slack. Slack will likely be the one that gets all the attention, but DocuSign should be in there as well because I imagine that's going to be more of a stay-at-home conversation that people will have there. Zoom reported earnings, did well, raised guidance. Lyft said they saw a 20% increase in riders month over month, which is good. That means people are out there. They're not scared to get in these cars and get going. And then Lyft actually said they would see lower losses if this trend continues. Remember, they don't make money, so they have to focus on the losses. They said they'd see lower losses if this trend continues, and I'm good with that. I think we've covered it. Seems like a rather successful showing today. Thank you for your patience while we put together this new effort and get all this set up. I think the color looks better too. Yeah. I think it's looking good. Hey, I'll take a chance here, try to answer some of your questions. I'm going to get out of the way and let you live your life. I do appreciate you coming by. I love it. You think the Dow's going back to 30,000? Building momentum and building cause for that, but the Dow's still got about 8% left to go until it gets back to those highs. So we'll see what happens. Yep. Oh, yeah. You knew those chicken nuggets were too expensive. I like that comment. I knew something was off. I go to the chicken section and every chicken nugget seems to be $6.99. That's something. I love it. Discover Financial moving into overbought territory as well. Careful on these. They've had great runs. If you're an investor, you hold tight. You say it's going to pull back, right? It's going to pull back and I'm okay with that. If you're an active investor or trader or something like that, you're looking for your moment to take some of your profits, right? Because it's just extended in the short term. You got to recognize extension. Yep. Simon Property Group, yeah, a lot of the weak stocks like Simon Property and a lot of the retailers and stuff, they did well. A lot of the weaker stocks did well today. A lot of the stronger stocks did poorly. Yep. Yeah, just the economy reopening sort of mindset there. Do you follow natural gas? I do. I use the UNG ETF. I saw it was up a little bit today, but I don't follow it week by week as far as natural gas numbers. They come out tomorrow, I believe. So I don't follow that too much. It's also kind of an odd time of year to be following natural gas. So I don't talk about it a lot this time of year, no. You were holding 50 shares of Apache? All right, cool. Hope it gets going for you. Paid you a dividend, but it only paid me a dividend for one share. It could be that you bought the one share first after the ex-dividend date, and then you bought 49 more. Otherwise, if you think there's an accounting error, you should contact your brokerage firm. But that's probably the most likely reason, is that you didn't own all 50 shares at ex-dividend date. And here comes the rain. That's not static. That's not our fault today. Everything is working smoothly here. But we're going to have rain likely for the next few days. So if it gets annoying, I'll wrap it up. But let's see. What are your favorite stocks? I can't say. I'm not allowed to do that. I can do that in our Wine and Wealth class for our customers, but get in big trouble if I make individual stock recommendations. What I can do is point out technical patterns like Wynn, Amgen, Xilinx, Domino's Pizza, and you can make your own decisions from there, but I can't say that I like individual stocks. Not allowed to do that. Get in trouble. What's the thought on the rally after this drop here? Yeah, we talked about it. I mean, I think obviously it's impressive. I think people would be excited for a pullback, and we're in the same position we saw a couple times last year where if the markets pull back, you don't really scare anybody, you get people excited. And that's the best type of pullback to have, really. Yeah, usually we do all right here with the rain. It comes and goes, but it's really thick. Yeah, it's really thick here. For the membership site, are you allowed to talk more about that here? Yeah, we're putting the final touches on it. We chose to build it custom rather than go use a template or some other online service. So it's going to be our own custom membership site for people that cannot be customers of Jazz. If you are a customer, you'll just get it included anyways, but we're going to be doing more research posts. It's pretty cool how it actually looks. As well as videos that are more research driven or market performance related, so that not only our customers that are into more active trading have another place to go, get some extra help, but that also those of you that, you know, you just like some of the stuff that we share, but you can't be a customer, you maybe in another country or something, maybe you'd be able to participate. It's the whole idea, by the way, is we want to hire another developer, and so rather than just do some marketing and try to get you guys to open accounts, I thought, what if I do something for you and share some of the research that we have? Maybe we can make a little money, pay for a developer, help make everything better. That's really the goal. So we're not doing it to try to make, like, the whole goal is to pay somebody, not to make money off a service. So it's going to be very cool. Almost ready, by the way. Yep. With all the money printing going on, there's a lot of it going on, I'll give you that. Do you think individuals need to readjust how much money they need for retirement, considering there'll be considerable inflation? If you're one of our customers, no, you don't have to, because we actually calculate inflation as we go. Most advisors tell you, yeah, save about this much and then add this much for inflation over the next 20 or 30 years. Well, that could be a wide range. We have no idea. You could literally land hundreds of thousands of dollars over here or hundreds of thousands of dollars over here. So what we do is we say, you start with this much and you invest this much. Then every year, whatever inflation is, that's how much you increase your contribution, and you don't worry about what inflation is going to be 5 years from now. You adjust for inflation each year, and then that way you have a much tighter number to project out over the next however many years you have. So that's that. I'm going to probably wrap it up here because I'm starting to talk pretty loud, and I hope it's not annoying to you guys, but we will pick it up again tomorrow. I appreciate you guys hanging out, and we'll be back then. If it helped you today, we didn't make many mistakes, huh? Maybe hit the subscribe button, help us out. I like it. Anyways, have a great rest of your day. See you later.
Why should you choose Jazz Wealth as your retirement or long-term investing service? Our portfolios are managed by us, not some faceless mutual fund manager. Our private classes will teach you everything about investing and getting your dough straight. Best of all, our fiduciary standard means your best interest comes before ours.